joined by Angus Murray. He's the CEO at Castlestone Management. Thanks very much for speaking to us. So first of all, I wanted to ask you about copper. We've seen significant developments with that commodity specifically because it's almost doubled. It's now close to $8,000 a tonne since the collapse of Lehman, a huge rise in that commodity. What is the significance of that?
I think it's showing you that the world is getting better than where it was certainly after the fears of Lehman Brothers. So Lehman Brothers collapsed, we feared things, most asset classes, nearly all asset classes collapsed. What you're seeing is probably a more normalised economy, or beginning to venture towards a more normalised economy, and hence demand, as was previously just said, is coming back. Hence why you're getting prices recovering from the low levels we previously saw. So you're saying that the rally in commodities that we just heard Manus talking about, you expect that to continue? Not at the same rate, I'd agree with that, but clearly the equity markets have recovered, and what that's indicating to you is equities run with expectation. If the world is better, then you will get higher prices. Commodities relate a lot more to supply and demand fundamentals. That's what I was going to ask you. Are these prices a reflection of expectation or demand? They haven't risen as much as equities have from the low levels we've seen. So I think what we're seeing is a degree of speculation, a degree of investor interest, certainly. The next step to that is, as the economy improves, you will get a fundamental improvement in demand. As long as supply doesn't increase, OPEC, for example, can control that, at least with regard to energy, what you will see is higher prices coming through over a period of time. So what about the impact of the dollar on the performance of many commodities, particularly those priced in the dollar that usually move in an opposite direction to the currency? Yeah, that link is clearly there. I think one of the other influences that's going to come through is the Chinese currency. If we see an appreciation occurring, then they can obviously afford to pay more in US dollars for the commodities themselves. And given the growth in China, we will see an underlying degree of demand come through. So currencies will have short-term effects. The major effect, though, will be actual genuine demand to come through on those commodities. So more specifically, what are your most favoured commodities right now? I think as long as OPEC controls the price or controls the degree of supply, which it is with regard to commodities, we will see a higher oil price over a period of 24 or 48 months. I certainly think in terms of precious metals, platinum could easily end up being a lot higher than where it is today. So instead of being, say, just below $1,700 an ounce, we would expect prices up around $2,100, $2,200 an ounce. Do you think that we will continue to see large swings in prices? In all things, yes. But it's interesting, if I look over the last decade, the GSCI commodity index was up an average of a little under 7% per annum, whereas stocks actually returned a little less than, say, -3. So what we saw is a massive outperformance of real assets over financial assets. I'd expect that both stocks and commodities continue to swing up and down over the next 10 years. But at the end of that 10-year period, real assets will have outperformed financial assets by a margin, maybe 3–4%, but that's pretty meaningful in terms of a return of a portfolio. I want to quickly ask you about demand in China, of course, key to global economic recovery as a whole. You mentioned that China may be able to pay more if they adjust the RMB's peg to the dollar, but also we're seeing indications Chinese government may be taking measures to rein in bank lending to get asset price bubbles under control. How do you think this is going to affect their appetite for commodities? I think they'd want moderate growth, consistent growth, 8–10%. You don't want growth going too high. We've seen that in the rest of the world. So as long as we get a consistent level of 8 or 10% growth, that's pretty powerful. Don't forget that will spread to the rest of the world, though. The American economy, as was previously said, is beginning to recover in itself as well. And that will generally lead to more cars being bought, more cars being produced, more houses being sold, more houses being built. And that leads to a genuine level of demand with regard to commodities. Angus Murray, Chief Executive Officer of Castlestone Management. Good to talk to you. Thank you, ma'am.